Hello everybody, I am Meenakshi Dubey from Kotak Mutual Funds. Welcome back to part B of our module which is known as the next wave. Now, before we go ahead, let's take a quick recap of the points that we have discussed in part A of the module. In part A, we have spoken about manageable challenges, which comes like the client servicing, spreading the awareness about the mutual fund industry, then the online challenges which can be managed, the how to manage the short term perspective of investors, the low penetration in the market. We also spoke about the non-manageable challenges. Though non-manageable challenges are the challenges which are not in our control. To name a few, like the reduction in the trail commission, etc., etc. We also spoke about the low participation and low penetration pyramid, which gave us a clear detail of how the Indian population is of 130 crores, and as compared to that, the total mutual fund investors that we have in the country is merely of 2 crores. So that has been the discussed points for our module for the module in part A. Let us now go ahead and see what do we have in the part B. As we ended a module talking about the challenges, so here I am to present how we can see the opportunities that are lying in the challenges. Well, let us just have a look. This is the same pyramid that we have seen in part A. Okay. The image here indicates that despite the mutual fund industry registering a growth by over 20%, it has only 2 crore investors. The numbers indicate the huge opportunity lying ahead. What we need to do is, as industry leaders, we should focus on the B30 category cities. If I'm talking about B30 categories, I mean tier 2 and tier 3 cities. And this is because nearly 90% of the India's population resides and accounts for nearly 16%. It is time that all the smaller cities should be brought under the wings of the business. It is our time that we always feel that the tier 2 and tier 3 cities don't have potential, but these are the small places which have very good potential. It depends on us how we go and explore the market. It is not that all the big cities will have all the opportunities. The opportunities are there in tier 2 and tier 3 cities also. What we need to do is we need to come out of our comfort zone and target these short cities, the small cities also. Rising middle class income. This is very, very important. Now, with India rapidly transitioning from a bottom of pyramid status to become a truly middle income country in the next 10 years. So this 10 years are going to be really crucial for the Indian economic growth. Markets are exploring fresh avenues of growth from trading consumers. So by 2030, India will add approximately 140 million income and almost 30 million high income households, which is a remarkable improvement. The number of upper middle income households will be more than double to 168 million, which is almost 44% of the total household in the country. The outcome of this economic transformation will be most evident in the low income household. Let me also tell you the 127 low income household, which forms nearly 43% of India's total household, are expected to reduce to just 57 million, which is 15% of the total household by the end of 2030. In the same period, lower middle class income households will see a marginal rise from 97 million. It will see a marginal rise from 97 million, which is 33% of the total household, to 132 million, that is 34%. Let us go ahead and see the evolution of household income in India. Well, if you see in the earlier slide, middle income household has grown from 16 million to 61 million, and as is expected to reach 168 million in next 10 years. So here the numbers are being shown for the year 2005, the movement till 2018, and the forecast till 2030. You see there is a remarkable improvement in the high income class. My focus area will be from the improvement in the lower middle income and the low income category. If I have to see the low income category, which was approximately 151 million in 2005, will be less than half in 2030. That means the scope of investment for all the household is going to increase drastically. The income potential is going to increase drastically over the next 10 years. So, as I said, there is an immense opportunity that we can see in the next 10 years. It is our job to get into the tier 2 and tier 3 cities where there will be a major shift of income. The low income will move ahead in the the middle income level, and the middle income level will slowly move from middle to upper middle and higher income category. So let us keep our focus area intact here. Let us go ahead and see the rising middle class incomes further. Middle class population in India has increased manifold. Upper middle class has grown from 1 in 5 to 2005 to 1 in 4 in 2020. Similarly, a sharp incremental movement in C is seen in all the income categories. Today, India has 6.1 crore upper middle class household with disposable incomes. However, the sad part is that we have only 2 crore of the population who today invest into the mutual fund. So the question is how to tap the remaining population of 4 crore. Probably a new kind of marketing strategy can be the answer, and which has already been discussed in our previous module, which is known as acquiring new clients. There are different ways of tapping new customers, especially if we have to focus on the tier 2, tier 3 cities, the lower income and the low and the middle class income. We need to actually understand and create the need that why investment is necessary. Going forward, I will also like to show you that there is a movement in the investment style also. Slowly, steadily, investment in the physical assets have been moving towards investment in the financial assets. The graph here shows that there is a movement from physical assets to financial assets. If you see the graph carefully, there is a decline seen in the purchase of physical assets from 69% to 62%. Whereas now the question is, where is this money moving? Though the growth is slow, but slowly and steadily this money is moving from investment in physical assets to investment into financial assets. There has been an increase of investment in financial assets from 31% to 38%. There is a movement in products like stocks, bonds, commodities and mutual funds, etc. Also, we have seen a movement of investments in the assured returns product to the market linked products. If I have to show you this graph, and you see the green line indicates investments in the bank fixed deposits. So slowly there has been a decline in investments in the bank FD, and investments in the Nifty, the stock market, the mutual fund industries have increased. There is also a shift from traditional products to market linked products. Today, the people have realized that with rising expenses and declining interest rates, some level of market risk is a must. Now, even the decline in the FD rates, which we have been seeing over last 10 years, this is also a risk. My money that is kept in the bank account is also at risk. Why? Because it is not giving me the return that I used to get 10 years early. So the better is I move that money from fixed deposit and invest into the options which can give me better returns. And since now this realization is there, what will be the best option at this point of time? The best option will be to put your money in the mutual fund accounts. That is what we need to educate our investor, because he cannot put his money directly into equity. There is a huge risk. If he keeps his money just in a fixed deposit or a bank line, that means he is losing out onto the opportunities. So in either cases, the risk has to be there. And we all know that there is no other option better than mutual funds, as mutual funds manages the risk in its best capabilities. So though the movement have started, we need to promote more and more awareness about the mutual fund so that this movement now becomes faster. Going forward, the another wave or the next wave of opportunity is these particular age spectrums that I'm going to talk about. Both the age spectrums have come with the wave of opportunities for the advisor. The first is the millennial category. We have been talking about the millennial category. Now the point is, why are we focusing so much on the millennial category? Because that is the upcoming investor, the sea of investors, and there is a lot of potential available in this category. Now why is that so? Because millennials form 1/3 of our population, which is approximately 34%. Important to notice, they contribute 70% of the total household income today. Millennials also account for 46% of the workforce. So there is no doubt that this segment is not going to provide us a significant opportunity. There is a lot of opportunity when we talk about this age spectrum. It is that you need to install the discipline of investment in this category. Initially, they can put up some challenges for you, but if you manage to install discipline in their investment at this stage of life, they are going to remain invested with you throughout the life. Another important age spectrum that I want to focus your attention is the golden ager, that is the retiree. With the proportion of senior citizens increasing, India will have more than 3.5 crore golden ager or retirees by 2030. Now, with increasing life expectancy, lack of social security, rising medical expenses, senior citizens need solutions. They need solutions that not only take care of all these things but also beat inflation. In fact, logically thinking, they need to support their golden years with financial investments. So this is another category on which we can focus. So basically their investments can be divided like the initial stage, the accumulation stage, and the reaping stage. The accumulation stage and then the further reaping stage can be helped or can be managed with SWPs, the systematic withdrawal plans, right? So these are the two categories that we really need to focus. As we say, the opportunity lies in offering accumulation solutions to millennials. That means the millennials, for millennials, we need to target on the accumulation, the more scope of investments. Whereas if I have to talk about the golden age, the focus should be on the distribution solutions. The distribution solutions to seniors, both of which mutual funds are well suited to do. Mutual funds, in fact, if I take these millennials ahead, as I said, they can give me the business throughout the life. These millennial is one of the bucket which can actually generate business for me in their accumulation stage also and in their distribution stage also. Going further in our next video, so here we have spoken about the age spectrums, the focus categories. We have seen the difference in the income category that we are going to see in the near future in India, right? In our part C of the module, we will talk about what is compartmentalizing, what is contingency fund, the importance of contingency fund, and the most important part, the growth stories of the Indian mutual fund industry. It will also tell us that what are the opportunities that are further there in our way. So that is all from my side in part B of the module, the next wave. Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.